Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. Well, we thought we would take one final look back at the year 2009 before we officially close the books on this year, and we're going to do that with our editor-at-large, Steve Reitmeister, our research director here at Zacks, Shiraz Mian, and, of course, that top market technician that we always talk about here at the Roundtable, Kevin Matris. A lot of big stories out there this year. 2009, no shortage of big market stories, big corporate stories. But we're going to try and isolate some of the bigger ones. And probably the one that, the stories that most people are having, most average people, even average investors, having the most difficulty with is how can the markets keep going up when people are still losing their jobs, still out of work? Shiraz, help us reconcile that a little bit, would you?
Well, the key aspect, the way I look at it, is the outlook going forward and not the present difficulties and what we have come through. But even realizing and appreciating the improving outlook for going forward, it's not a bad idea to just dwell a little bit on how bad the situation was towards the end of 2008 and in the beginning of it, 2009. So we had a complete frozen credit in the economy. Mm-hmm. When the Fed came in and backstopped commercial paper for these blue chip AAA rated companies like GE and many of the others, that really told us that how the average and the high yield and the mom and pop business in the economy was doing. So extremely tough business environment. Coming from that time onwards now, granted, we have a 10% unemployment rate. Granted, the credit is not flowing as it was in the heyday of 2007 and 2008, but we have come a long way. Spreads are narrower than they have been in a long time. Mm-hmm. There are far more bond issuances in 2009, than we have had in the preceding year. So the outlook is bad. Relative to how it can be a very positive and favorable one, but it's definitely a huge improvement on what we have seen in the past, and even on the jobs front, we are seeing the beginnings of positive turnaround, most likely in the coming month or two.
Steve, what do you think?
Yeah, what people have to remember is that the Dow was at 14,000, about 2 years ago. Mm-hmm. Okay. And so we are still trading at a 30% discount to that level, which is probably appropriate. So in other words, you could say that it's already kind of being taken into account that things are not as good as they were, but the entire nation as a whole, we as a going concern are trading at 30% off, okay, those levels. And that should reconcile, why the market is up, because it rallied from a place that was too low. The market did not have to be 55-60% off. We as a nation shouldn't be sold at that much of a discount. We don't need to go to TJ Maxx, okay, to be sold to the rest of the world, okay. So now we're at a place knowing that we haven't fallen off the cliff, and that 30% off of our peak makes a little bit more sense, and that we are going in a positive direction, even if it's not as fast as we'd like it to be.
Kevin, you agree with that? I mean, people who look at the economy on a regular basis and study it will all tell you that near the end of a recession, jobs are lost, right, in a fairly large number.
Right. Yeah, I agree with the comments they made. The market is a forward-looking mechanism, and the market had priced in the absolute worst-case scenario earlier in the year. When the worst-case scenario didn't materialize, it started to reprice in better things. So the market was forward-looking. They were expecting things to get better. The economy actually did start getting better, and that has what continuously has fueled this rally, and probably will continue to fuel the rally until it appears as if the economy isn't getting better. But right now, all signs point to, even though modest, growth nonetheless, and that's why the market keeps on moving higher.
So Shiraz, can we even ask the question, which is more important to investors, the economy rebuilding or the Dow reclaiming 10,000? Can we even ask that question because they are so tightly woven together?
I think that's the right way to look at it, that they are so tightly connected to each other. You can't have a movement in the Dow if you're not having any improvement in the underlying economy. And the all the improvement and the gains that we have seen in the equity markets and all the other markets as well were after we saw some positive signs in the underlying economy. So the correct way to look at it would be that if you don't see the positive signs with the naked eye, it's in the outlook.
Okay.
It's the improving expectations for what the market as a whole in aggregate is looking at 3 months out, 6 months out, and in 2 years out, and that has shifted and improved significantly from earlier this year.
All right, I want to go around the horn here and get from each of you what you think the one takeaway from this year is for investors. If there were a lesson to be learned from this year, what should that lesson be?
The lesson is that panicking is not the right answer. That there are ways of evaluating companies and what they're worth and being in them, and neither is putting your head in the sand. So neither one, panicking and putting your head in the sand, neither one is acceptable. You do have to face the reality that is going on, and if you did, you would have made better moves. You would have taken more money off the table at the when it was coming down, and you would have shifted back in. Maybe not at the bottom. You don't always have to perfectly time it. But you would have saved yourself some of the pain, and you would have grabbed a lot of this upside when it came back if you did that.
All right, Shiraz?
The inherent resiliency of the U.S. economy. That's the key takeaway when I look at the whole plethora of stories from year-end 2008 onwards to this time. The last quarter of 2008 and the beginning of 2009 was perhaps the worst time in my professional life, when all the rules and all the theory that I had learned seemed to be not working. And from those depths, we see the positive optimism and the positive outlook for the economy now. The only way I can describe it is the inherent strength and resilience of the economy.
All right, Kevin, what do you think the takeaway is from this year?
I hate to repeat a cliche, but I think the saying goes, be fearful when others are greedy and be greedy when others are fearful. And this was no better demonstrated than just watching all the moves that Warren Buffett made this year. And he recognized the resiliency of the U.S. economy. He also recognized that there's opportunity no matter what is happening out there in the marketplace. From his bets on the banks early on, to his other bets on other companies, to restoring confidence in the marketplace, and also his big bet buying Burlington Northern. So I think the takeaway is no matter what is happening, try to keep your head and always try to find opportunity, because no matter what is happening, there are always ways to make money in the market.
What about this gold going to record highs this year? Steve, is that a good thing?
No, not really. I mean, gold is a store of value, and quite a bit of its rise had to do with the falling dollar. So that means lack of confidence in the local currency and a desire to hold something that they think that will keep its value much better. Now, here again, gold went to $12.24 and is already back down about 10% from that mark. And so, is that rally done? Maybe yes, maybe no. But your main question, is it a good thing? It's not a good statement of the U.S. economy that if gold is rallying that strong.
Is that going to impact the stock market going into the new year, do you think?
I think so, and I fully agree with Steve's assessment. I don't consider it a positive development in the market.
And it's a flight to safety move, right?
It's a flight to safety move. It's a hedge against inflation, and even at a broader level, in my view, it's a lack of confidence in paper securities. So you are towards the end of 2008, everybody lost this confidence, whether it was in the treasuries and the equities and international bonds and equities, and everybody said, this glittering metal. This is the store of value that we have kept as an asset from Cleopatra down to the present day. And that's something which is not good for the economy. We want the market to have confidence in the stocks, in the bonds, in the international paper. And to that extent that everybody was moving towards the metal and away from paper securities, it was a bad. I don't think it's going to continue in the coming year, though.
All right, Kevin, I'm going to give you the final word here. Was there a big corporate story in 2009?
You know, I would have to say the corporate story is like I had just said, watching all the moves that Buffett had made. He came out when, everybody was panicking, everybody was wondering, were things going to get even worse? And I believe watching all of his actions did indeed create a tremendous amount of confidence in the market, and I believe it gave other people the courage to be able to look for opportunities as well.
Him buying.
Yeah, I was thinking
interest in
about,
companies?
what were the big stories. One story that came to my mind was Intel. For some reason, when I think about this last year, there was something about Intel. It almost seemed as if it was pivotal. When they came out and they had a good look towards the future, even though their stock price wasn't the greatest performer this year, it almost seemed like a watershed. Like people believed, okay, we finally got a big name company. This company is expecting better things. It's a big bellwether tech, and that was important. But when I really look at the entirety of the year, I would say it's looking at all of the moves that Buffett did, and I believe that was the corporate story that will be remembered for decades to come.
I lied. We're not going to give him the final word. I want to go around one more time.
Okay.
Are you glad it's over?
2009, I'm glad that the falling of January, February, March is gone. But really, it's when you have a year that the market is up 20%, it's hard to be upset with that.
But we're talking about the worst financial year in probably all of our lifetimes. Shiraz, what do you think? Happy it's over?
It was a humbling experience, Terry, and now that we've been through it, we are all the more wiser. So those of us who hadn't seen anything like this, and it's a big chunk of the investment professionals. Do I want this, or can I foresee something like this to happen again? Absolutely not.
No, we
but
don't
we
even
are
want to go
wiser.
down that road.
We are wiser now, and that's the key takeaway for me.
Kevin, happy it's over?
I got to tell you, I think the good times are going to continue. It was the second worst financial crisis we had, but it was also the second best 1 year gain in the stock market from the low after a bear market. And I think we're going to have a good 2010. I think we're going to have another good 2, 3, 5 years. So I'm glad the bad part is over, but I'm excited that the good stuff is continuing.
I guess I didn't lie. You did get the final word in there, didn't you?
Yes.
All right, so now we've officially closed the books on 2009 here at the Round Table. In weeks ahead, we're going to be taking a look into 2010 to see what our panelists here think there's in store for us going forward. With everyone here, I'm Terry Ruffalo.